Welcome back to Young Bull Finance. Today, I'm going to be talking about SPG, Simon Property Group, and why they're one of my personal favorite REITs. So, I'm going to go ahead and start with what's currently going on at SPG. They currently have a plummeted stock price due to the situation that's going on in the world. They're down about 66%, which is quite a bit. That's kind of rings a couple bells. However, I'm going to tell you why I think this is going to be fine. SPG is going to be fine, and they might be a good buy right now. So, what is SPG? If you don't know, SPG owns real estate in malls, but not your average mall that you would have in your small town. They own crazy malls like stuff you'd go on vacation and see in Florida, like really high class, very, very nice malls that I think creates a different perspective. So obviously the prices drop. People aren't going to malls right now due to they don't want to get sick. The malls might even be closed, depending on the state. And overall, just a bad look for malls. But it's not just as simple as that. It's not once the vaccine's out, everyone's going to be back to the mall. People think and have fears that there's going to be a permanent change in how society shops. So people think that instead of going to malls now, people are now getting used to just shopping online and more of a difference in how people shop in their day-to-day lives. However, I think this is different for SPG. SPG owns these vacation malls, and people really wouldn't change their mind about shopping online or going. These malls are for people on vacation, rich people, they're going for an experience, and I think that's what's really special about these malls is there's an experience. You're going for the experience, even though it might be more convenient and easier to shop online. Maybe you won't go to your local strip mall anymore, but for a special occasion, one of these malls is definitely, people are going for the experience, and I don't think it's going to really change how people shop at these particular malls. And now, however, I do think these malls are very good in an economic boom. So in the last 10 years, this company has grown a ton. And that's because the last 10 years was one of the most notable economic booms we've ever seen in the United States in history. And for a mall like this, that helped a lot. And I think after the virus, even after the vaccine is out and everything's better, I think there's going to be residual unemployment and a residual slow climbing recession. So I think that the business for these malls are going to be hurt by that. Not as many people vacationing and not as many people. Obviously, when there's a recession, going on a vacation and going to spend your money at a crazy mall like this is not on your top priorities. However, I think, there's going to be an economic boom again. Time will tell. America goes through the same 8 to 10 year cycle of recession and boom. There's going to be a boom again. The malls are going to be, highly sought after, and SPG will be back on top. That's my prediction. So, anyways, let's go ahead and get into the meat and gristle here. They have a high dividend yield right now, but that dividend is based off the lower price, so it's a little inflated. Their dividend's usually about 5%. And which is good. A 5% yield at a stock valuation of 150. That's going to be a lot of money. So let's go ahead and look at their income statement. Revenues have been slowly growing over the years, pretty consistent. That's nothing too volatile there. That's good to see. Operating income consistently going up through the years. A little bit change in 2019 and the past 12 months. And let's go ahead and look at their balance sheet. So, all their real estate assets, or all their PP&Es in real estate, they have in the last 12 months They have gone up in cash and equivalents by an insane amount. I'm not exactly sure why that is, but I mean, it's not necessarily a bad thing. Total liabilities has been consistently growing through the years, so just stuff they're liable for. And as we see, their assets have been going up as well. So liabilities have been going up, but so have assets. Pretty good. That's good stuff. We look at their dividend scorecard here. So total annual payout, $8. That's really good. Payout ratio is 82.39%. That's a really high payout ratio, which sometimes can be scary, but considering this is a REIT, that's pretty normal. 10.68% growth rate. That's a lot of growth right there. That might be a little bit skewed due to the economic boom, so we'll see. But that is a nuts growth rate. And their last dividend was $2.10. Very good dividend, and they pay quarterly. So let's go ahead and get to dividend history here. They have not the most consistent dividend I've ever seen. It's pretty good. It looks like a couple of faults here and there. However, in the last 8 years, they've continuously rose and paid a consistent dividend, which is great. This is, however, during the economic boom. So this kind of goes along with what I was saying earlier, is that a company like this will do better when the economy's booming, which sounds self-explanatory because obviously when the economy's booming, companies are doing better. But this is special because this is specific. These malls are for people that have money when people are on their, when they feel their richest, when they're on vacation. That's what these malls are for. And obviously when the economy's booming, they're paying an amazing dividend and they're doing very well. I think there's going to be a hiccup. This is just what I overall think. I think the dividend looks promising. I think their balance sheet and income statement look fine. I think there's nothing, no red alarms, no red flags. I think that there's going to be a hiccup, maybe a 1 to 2 year after the virus is over. So we're looking at, I don't know, when the vaccine comes out, they say a year. So I'm looking at a 2 to 3 year hiccup of maybe a slow growth back to the top. But once the economy is back booming again, SPG is going to be a company you want in your portfolio. And man, it is at a price discount right now. So personally, I will be buying more SPG when I get a chance, when I get more money. And that's personally what I think. I think they're a great company, and I think they're on a discount right now. It's going to be a little bit of a shaky back to the top. But, I mean, if you're a long-term investor like me, I would heavily consider looking at SPG and looking at them a little bit more in depth. So anyways, thank you guys for watching. Please like the video if this helped you out. Comment what you think if you have SPG in your portfolio, if you're going to be adding them, if you're selling SPG for any reason. If you think I'm an idiot for anything I said in the video, please comment down below and subscribe to my channel. I'm going to have more videos like this coming out soon about different stocks, and I also have portfolio updates and just general finance advice. So thank you guys for watching, and I'll see you next time.